Good morning and welcome everyone to BDO's webinar on strategies for success in private owner-managed businesses. We've really got a great bunch of panelists set up, and I hope you're all going to learn a lot. I hope that the webinar adds a lot of value to all of you. Before I introduce you to the panelists, just a little bit of admin. Our webinar host is going to keep everybody on mute. There'll be no cameras. However, please post any questions that you've got or any matters that you'd like the panelists to address. We're going to have a discussion for about 30 or 40 minutes, after which we can then address all the questions and issues. And if we don't get to all the questions, please, we will get back to everyone after the webinar. So let me introduce you to our experts on the panel. We have Ian Scott, who is Senior Partner at BDO and has many years of experience as trusted advisor. We then also have Amanda Orselli, who's a Senior Manager in the Business Services and Outsourcing. Amanda is responsible for the digitization of clients. We then have Chris Smith, who's a tax director, many years of experience in M&A, restructures, etc. We then have Ricardo Teixeira, who is the Chief Operating Officer of BDO Wealth Advisors. And then we have Bert Lopes, who's a Managing Partner, as well as the Head of Business Services and Outsourcing at BDO. But I think we're going to start first with Ian. And Ian, can you tell us about the role of the trusted advisor and how this adds value to the business owner?
Thanks, Anthony. What I've found over the years is that, everybody works in their business, but they also need to work on their business. And business is complex, especially in a country with South Africa, which every day brings a new challenge. And so if you have somebody who is outside of the business, in my view, it adds a lot of value if they've got the appropriate skills to be able to be a sounding board and help you, especially in smaller businesses as they start out. The owner is often alone and he lacks people that he can rely on for sound business advice and impartial advice often when he or she are faced with problems in the business. So the trusted advisor would be somebody that you could call, you can chat to and visit and take counsel from time to time. Accountants used to play that role a lot. And what we found was with legislation and the restrictions that have been brought in to comply, a lot of firms have been removed from that role. We are at BDO repositioning ourselves back into that role where appropriate, especially for smaller clients, where we believe, that's what it's need. South Africa needs employment. The employment is going to come from smaller businesses. And so the more of these smaller businesses that can grow and prosper and create growth opportunities and employment opportunities, that's helping to turn the country around. I have a slide, Anthony, which I'm happy if you put up, I could talk to it, just to show the different kind of conflicting aspects that an owner of a business has to deal with. So here I've just got a simple slide that shows the owner. And the owner has got a family. He needs to look after his wealth. He needs to look after the security and sureties that he's giving to the business and manage those. Initially, when you start out, often you have to sign a whole lot of sureties with trade creditors. He's got to look after the education of his children. And if ultimately he's got to work out whether he's going to sell the business or whether a family member is going to take over and succeed in the business. Ricardo will touch more on the aspects of the owner, but there's dynamics. His wife might be in the business, his family might be helping out, and all these things come into play, and as the owner of the business have an impact on the business. The second, if you could just show the second slide, thank you, is the business itself. Now, at BDO, we've developed the life cycle of a business, and it's called the diamond model. And what we say is a business starts with a dream, and then you initiate, you attack, you mature, you overhaul, you network, and then at the end of it, the business diversifies or dies. So we've got a life cycle approach that we apply to clients, and we have a whole lot of tools that we would apply depending on the stage that the client is in their life cycle. The business needs to be sustainable. That means it needs to operate if the owner is suddenly taken out or is sick, or can creditors be paid. Then a business needs to make a profit. Raymond Ackerman always said a business never goes insolvent with money in the bank. So part of our role as well is to say, how can we make the business more profitable and help them? And it has to have the appropriate structure. Often it starts as a single entity, but as businesses grow, you might want to put your assets that have got value, for example, a property, into a separate company. You might want to introduce a family trust. There's a lot of talk about trusts, and maybe Chris, some of the other panelists can touch on it a bit more, but we still believe that family trusts have a very appropriate role to play. And if they're properly managed and structured, can save a lot of estate duty and capital gains tax. We also need to make sure that the owner has, as the business grows, can delegate authority effectively and efficiently, and has the appropriate staff. Bringing staff in is always a challenge. And then again, at different cycles of the business, you need more staff, you've got to have skilled staff. And at some stages, like in the economy at the moment, you've got to restructure and we've got to reduce staff. So that's also very traumatic. And again, if you've got somebody to rely on, it helps. And the last circle then is the market. And the market is everything else. I put it into that outside of the business. In other words, what industry are you in? Your industry is your single determinant of your success or your failure. We can talk about the airline industry, which is very difficult to operate. And now those that have survived post-COVID, like Ryanair, have got bumper profits of billions of euros they've never had before. What's happening in your market? The market can also include the economy, the exchange rate, the interest rate, electricity and load shedding, and where you are located. Have you got unrest in your area, service delivery, etc. So these three elements all come into play, and often the owner of the business is stuck in the business, but the trusted advisor can help to link the family dynamics together with the market, together with the vagaries of the business, applying the knowledge that he has across all his business experience, and assist the owner greatly. Thanks, Anthony.
Yeah, thanks, Ian. I think there's some really important points made there. And I think, we often hear the saying that business owners must work on their business and not in. And I think that one of the most important things that a business owner needs to have is data at his fingertips. It's very much like running a business or going on a journey without a roadmap. And so I want to ask Amanda next. In terms of this part of the journey for the owner-managed manager, what are the common challenges that business owners face when adapting to new technologies? Sorry, we just have an issue bringing Amanda in.
Hi, Anthony.
Hi, Amanda. Did you hear my question?
I did. Thank you so much, Anthony, and thank you for having me here today. That is a very common question, Anthony, is how readily available is my information? It's the key part of the key reason why technology is so useful. And I mean, we all know we're living in this ever-evolving society, and technologies that is almost that beating heart for having convenience and ease of access to information. We use the cloud more than we realize. I mean, these online meetings, these webinars now today, in some form or other, we actually gravitate to technology, whether we'd like to admit it or not. And that access to the information is at the heart of it all. I mean, it actually just shows that there's such a business appetite for digitization that we don't even realize. And everyone is on this journey, and COVID's definitely accelerated that. But to have that proper access, that is achieved not only through technology, but more so the proper use of technology. How you get paperless, how we help private clients implement certain key apps that suit their business and not just have streams of technology adopted, which is what we've commonly seen in the market. At BDO, we have what we call our tech app stack, which is really important. And Anthony, maybe you can bring up the slide just to show some of the technologies that we do bring into BDO. These aren't a definitive or exhaustive list. This is just applications that suit a lot of our private-owned businesses, and we most commonly implement them. Now, we are global partners with Xero. Xero is our preferred accounting system. And there's this perception in the market that Xero can also be too small for an organization, you know, as businesses grow, as business owners want to expand. And it's so important for us as a service provider to private-owned businesses to illustrate and almost knock down that perception of having a too small accounting program, because it's what you build onto Xero that can actually create such a beautiful ecosystem. And it's all achievable through its open API. So we have partners with Dext, with PaySpace. You know, we have those partners in place that they also train us as the service providers to be up to date with the technologies, because if we're up to date, if we're skilled, we can deploy those technologies to our clients correctly. And a lot of clients can even adopt those technologies themselves. But I want to highlight an often overlooked point by private business owners. There's such a need in the market to implement these technologies, and a lot of private-owned businesses go out and get those technologies. But it's actually adopting the technology that is the most critical aspect. It's not just implementing it, there's a whole adoption that needs to take place. And private-owned businesses fail to recognize that just because you've implemented a technology, so a Xero, a Dext, anything else, then any sort of application, cloud-based program that you've got, it does not automatically mean that your business is now digital. You know, there's this common perception that, oh, well, I use the cloud, I'm now digital. If you're still following manual and primitive methods of storing information, collecting information, your internal process of approvals, you are merely doing this on a cloud-based program and not desktop anymore. And that is the key feature that we bring to the table with our private businesses to help them transition into that digital space and not just have applications implemented. And I call it an adoption. It's a whole overall of your internal processes that need to be looked at. And this is the biggest challenge that I've faced in the market. You know, there's the flow of information, your workflows. That focus is where we as BDO really walk the journey with our clients. You know, hold their hands, come in, do what I call a digital health check of what your internal processes are. Because you could be manually signing things and uploading it onto the cloud, where you can actually have systems like Approval Max doing those approvals for you. So there's no one tech stack app will be the same for any client. It's all bespoke. It's all dependent to your business. And it's so important that you trust an external service provider to come in if you don't have those skills yourself, just to come in and do those health checks and see where can you improve your business and your workflows, because the workflows are the key to harnessing technology. And I mean, just to end it off, the focus is not on your systems anymore. It's now the focus is on your staff, on your people, on your workflows. And that's the biggest disconnect that I'm experiencing with private business owners. And if I can just say, harnessing technology and not just implementing technology, that is how you prepare for digitization in the workplace.
Thanks, Amanda. Just put you on the spot, a quick question. I know one of the things that you do come across from time to time is when someone's been doing something for 20 years and they say it works. So why change something or fix something that ain't broke?
Yes.
How do you How do you take that business owner through that journey of convincing him that it's better to convert?
Well, Anthony, I've always said that our role at BDO is not just accounting and technology. There's actually a bit of psychology as well. You know, we get different clients, we get different private business owners that come to us, like you say, all with their own ways. Some are very apt for change, some aren't. And it's learning that client of how quickly you can nudge them or push them forward to do better. So every client that I've had come to me where they are stuck in their ways, it has been a challenge. It's to show them not that there's a change now involved, it's to show them what the benefits of that change will bring. So yes, things might work, but it takes longer, you know, and it's to prove and show the efficiency to that person that will eventually get them to move over. Some just take longer than others. So it's a bit more nudging. And then the ones that are really, they really, there's people that don't like change, but once you start demonstrating the benefits, that's how you hook them.
Great. And then Amanda, just one last question, which I know that does come up with business owners and their key staff when one is doing a conversion is there's a lack of understanding in terms of the cloud and in terms of all these applications. What people generally want to know is, who do I talk to? And how do you respond to that?
So I say reach out to your trusted advisor, reach out to your person at BDO, reach out to that single touch point. They're the ones that have, we are the ones that have that skill to, you know, we don't know everything. If I can just first put that out there, but we have resources that we tap into. We've got the partnership arrangements in place with these applications that I've listed, just so that we reach out to them. We've got regular quarterly meetings with them on typical and topical problems that come up with clients. And sometimes it is a system issue that has to be addressed as part of the program. You can escalate. You can even escalate it directly to app partners. You know, a lot of these app partners have these chat boxes available on their websites. So there's a lot of things that we've got at our fingertips. But there's some that still trust their personal advisor. They want to run things by them, which, I mean, we encourage that. Whatever it takes for you to get that knowledge, understanding of how to use, it generally comes down to an application use issue more than anything else. But if there are recommendations where you see that there should be something changed or upgraded or improved, those application partners feed off that feedback. You know, that's how they improve themselves. That they really do rely on feedback from users using their technology, of where the pain points are, what their challenges are, and that's how they then improve it going forward as well.
Fantastic. Thanks, Amanda. So we've really seen how the trusted advisor really makes a difference to the owner of a business who's looking to succeed. And obviously success is defined differently for everyone, but I think generally we can say that you know, running a successful business covers most of the points that Ian mentioned. But also a very important element, and I'm now going to pose a question to Chris Smith. Chris, explain to us how a business owner's journey to success, how that is impacted by taxation and the considerations of taxation.
Thanks, Anthony. The tax journey is very critical for the owner-managed business. And the purpose of the tax journey is to manage and to navigate potholes along the way. And some of them are quite small and some of them are quite large. And it's very important that you have a trusted advisor, which Ian also spoke about, that you can speak to optimize your wealth. I think that is quite critical, because that's what the owner-managed business is doing. The owner is working very hard, long hours. And we just want to give a helicopter view of some of the things that arise for the owner-managed business. But by way of example, we had a client called Peter, who started a business, a manufacturing business at 41. He was very, very, very successful indeed. And at the age of 73, he decided he would step out. He wanted to sell his business, keep it in the family, and he sold the business to his daughter, an engineer. And the business at that stage had grown to a value of 50 million rand. Now, given that his daughter was in the family, it was a friendly transaction. He sold a loan account. He did have independent valuations, and he would end up paying the capital gains tax. And during the course of that year, Peter fell ill, and his daughter came to us and said, well, you know, what are the implications? And the problem was Peter now had a loan that was worth 50 million that would have fallen into estate duty. And estate duty is 25% above 30 million, 20% below that. The net effect is that taxes would have been a considerable amount, in fact, almost 20 million rand, 40% of the wealth that had been built up over a period of 32 years. The question is, was there a better way of structuring that? Was there a way in which the wealth could have been managed a bit better? Fortunately, Peter is still with us, and so the estate duty at that stage wasn't a problem. But had Peter put the shares early on in day one into a trust when they were not worth, when he was starting the business many years ago, he would have ended up saving a considerable amount of tax and managing the process certainly a lot better. And I think that's where a trusted advisor comes in, and that's where the diamond model also comes in, where early on in those days, when you are starting your business and you're signing surety ships, you're borrowing money from banks and putting into the business and charging interest, you often are trying to safeguard cash flow and limit taxes and limit the structure. And still today, even though there are changes that arise in the disclosure of trusts and in the tax returns of trusts, it still is a beneficial way for the owner managed business to operate. The important thing of having a trusted advisor is that they will help you navigate through the changes. And there are changes that arise along the way. Also, when you start up your business, the registrations, the VAT registrations, the customs, and then general transactions that arise during the day, during operations, and you may want to ask, you may want to phone your trusted advisor at BDO and say, I'm entering this transaction, I'm not sure about it, what is your take on it? And I think having that knowledge available to help grow a business is adding peace of mind. And when we move in this diamond model that Ian spoke about from the startup to maturity, I think it's quite critical that in the process you keep your taxes up to date, you keep your filings up to date. It's very important that when SARS comes and does an audit, that you have that information available at your fingertips. It's also important, we now find nowadays notifications on e-filing that your tax practitioner or your trusted advisor that's helping you is continuously, every month, in fact, every 2 weeks, looking at your e-filing profiles and finding out, was a notification from SARS uploaded, and immediately telling you about it, because sometimes those things slip through the process, and to unravel them afterwards results in penalties. So I think we're finding it's very proactive. You have to be proactive. The other thing is tax is a cash flow, and you want to know, what are you going to have to pay in the next 2 months? And often it helps if you sit down with your trusted advisor and they say, well, this is an estimation based on these latest figures. We see you doing better, or we're seeing times are tough, maybe we must adjust your cash flow to keep more cash in the business. And this is how we manage that process. But I think there's continually has to be an interaction. For me, when you have reached the maturity of your business, there's still going to be changes. There's always changes in tax legislation, in regulatory legislation, in trust legislation, and that you need to want to stay up to date. Should you want to sell your business one day, what we are finding is it's quite critical to almost have a health check and a due diligence performed, where you check all the taxes, the payroll taxes and the VAT, and also the income tax. Most people who buy businesses or private equity houses that buy businesses will conduct a due diligence, and what they will do is examine and find out, was the company compliant? Now, the big issue about these due diligences is not necessarily, not everything can be 100% smooth. It's how you fix it up. So yes, if I had a problem with a payment, did I go negotiate? Did I engage SARS? Did I resolve it? I think that's more critical. It's not that there's a total clean state for income tax and for payroll or for VAT. It's rather that when a problem arose, there were steps taken to resolve it. And I think that goes a long way to enhancing the final value when you sell a business on your journey. Again, there's many incentives for small business and for micro businesses, and we certainly have quite a number of those in our small business operations that we help to grow. But very quickly businesses expand from above the thresholds, above 1 million from a micro business, above 20 million from a small business corporation, and into the bigger businesses. And when they do that, you want to have the right tax structure, the one that protects you, and the one that you are able to grow and focus on the business and not necessarily be kept up at night with tax issues.
Thanks, Chris. It struck me while you were talking that if the business owner is going to develop a strategy, which ultimately is for development of wealth, and you're going to ignore the tax element, very similar to running the Comrades Marathon, which is approximately 90 kilometers, but only training to run 60 kilometers. You're missing a significant portion of that planned wealth. Another issue that you mentioned was being up to date. And I suppose one of the responsibilities of a business owner or CEO is to manage risk. And clearly, if you are not compliant from a tax perspective, the consequences can be quite severe, not only in terms of penalties and interest, but as you mentioned, it's unplanned cash flow and is detrimental to the business. Great, thanks, Chris. I think
Thanks,
also one of the issues around tax is that ultimately when you're looking at your ROI and you're looking at building up wealth, obviously you're looking at an after-tax value. And on that basis, talking about wealth, I want to ask Ricardo to tell us a little bit more about the balance between work life and building up wealth.
Thanks, Anthony. Yeah, I think that's where a lot of people struggle, is that concept of actually, first of all, what is wealth, before we even get to the balance. And I think as a financial guide to families, our approach at BDO, Anthony, has really been around and starts with advocating having a framework for managing a wealth. And what we found is that if you categorize assets on your balance sheet to start to reflect like their true nature, you'll end up, I think, having a very valuable strategy for your success. And thanks for sharing that image. And I think when we talk around organizing wealth, Anthony, and we talk around this balance, I think it's understanding the relationships between what makes up our balance sheet. And I think being aware of those components that make up a balance sheet is that they're not all assets are the same. So not all assets are equal. Not everything you own is an investment. And I think often the mantra that we talk about as wealth advisors is that true wealth is often what people don't see. And so having a strategy, or at least a framework to understand what makes up your wealth, is the good starting, is a very valuable starting point. And for us, business assets and lifetime assets really make up wealth. What falls into your lifestyle is largely an expense. And I want to just unpack a little bit about that. But once you have a framework for understanding what are the different categories of wealth, you then also have a basis in terms of understanding how do you manage that wealth? What are the rules that apply to it? And what choices do you make in how you actually direct income to assets that can create wealth? And so I think often I talk around the fact that we all know the difference between working and taking a holiday, but those lines get blurred when you work on holiday. I think the same applies to wealth, is that you intuitively, I think you know the difference between like your business and investment and like your luxuries in life. But if you don't consciously categorize them, you're really going to start blurring the lines and not really going to know where you stand in terms of your wealth journey and what choices you can make. And so for business owners, what we suggest is these three circles, or the bucket approach. And so if I start with business assets, Anthony, that's simply your primary source of earnings. It could be you could have multiple assets that fall into this category, but it's every asset, every investment you've made that you are actively managing and that is generating an income for you and your family. And it's this category where you're investing. And so it's that invest strategy to allocate capital. Ian mentioned sort of properties and the like as structure into a company. We find that physical property is definitely a business asset. It's not an investment for your lifetime. And so if you manage it as a business asset, you're going to have a very different relationship with that asset. And so all assets that fall into this category, I think, really are those that are high risk, high return, and they will be the assets that have the greatest potential for your wealth creation. And so our advice is these are the assets you can gear. You should use leverage. You should insure them. You should insure yourself as a key individual. You should have business insurance. And knowing that this grouping of assets is really what's going to start funding how you live and also funding that bucket of lifetime investments that you'll use when you're out of business or you've exited business. And so if I move to that, if I just start with lifestyle, I think that's often where we direct a lot of our income. And the reality is once you start categorizing it and you're aware of it, is that these are really I like to call it the toys that you choose to invest in to enjoy your life. It's our homes, our cars, our furniture, all those material things that define how you live, right? But these are not investments. Okay, they don't create wealth, and you shouldn't have debt on these for a start. And so our advice in using a framework like this is you start understanding as to how much have you invested, in inverted commas, into these expenses, and knowing that it's not wealth, but it's your choice of how you're going to live. And I think I often reflect on the fact that we get challenged as wealth advisors that a home is an investment. And I know the argument, and it's often around the fact that a home is a store of value, and it's going to release capital when I eventually retire. But that's a flawed argument. It's a home. It's going to have a roof over your head. And the only time you'd actually, I think, realize capital is when you sell that home and you rent. And if that's the case, then that is an investment. But if not, until then, it's a lifestyle expense. And that leaves that last bucket, Anthony, which I think is vital for business owners particularly, is having a conscious decision and a conscious strategy to allocate capital to this bucket called lifetime assets, which you will eventually draw down on to fund your lifestyle when the business assets you've disinvested from those. Okay, so once you've, let's say, exited from the business world, or even a great example we've seen often with our clients now is that they're slowing down, still active in the business, but taking less of a leading role. And what we've seen is that the earnings stream obviously dips off because they're less active. And then they've got this lifetime bucket to draw on to fund their lifestyle. And so lifetime assets should be your low risk investments. They should beat inflation. The strategy there is all about beating inflation. And it's ultimately your safety net. These are passive. They're not actively managed. They're listed, low maintenance, low effort. And these are funded from that pay yourself first strategy from the business. So when you're directing earnings from the business, is directed into this bucket so that you've got capital when you need it. And so I think, yeah, so to your question around balance, I think to me, it's, in our experience, it's about understanding the relationships between your assets and getting the balance in those. So knowing where you're directing your wealth. It's almost creating a strategy for diversification, right? That you're not just putting everything into the business, not putting everything into your lifestyle. And I guess the term we use is you're taking chips off the table and you're directing it into this bucket of lifetime capital. And I think that's, for us, the framework is a great starting point.
Great. Ricardo, can I ask you, it's possibly an obvious answer to a question, but
sure.
How soon or how early should a business owner start planning this?
I think it's a great question. I think there's two parts to it. One, I think there's the myth that you only need an advisor when you've got wealth. I think we must bust that myth. If you're in business, you need an advisor, whether it's a business advisor or a financial advisor. And so that's the first part. And I think secondly is it's got to be done early on. I think we see too often, and I think Chris, you alluded to the story of Peter and the business and the wealth he created, is that you can never start early enough. And the simple reason is that it's too late to structure once you've created the wealth. But it's way easier if you do it right up front. I mean, we see, particularly with BE transactions, they get done with no thought. They just allocate, or maybe there's a deal done, but the structuring of the ownership of the shares isn't done correctly. And then once they materialize, you've got an inefficient structure. So I think, yeah, it's a very important factor. And I think it's what's become clear to us as advisors that it's not about having the wealth, it's about just planning for that future. Because you're going to exit at some point and you're going to realize it. You're going to be successful. Plan for it now.
Fantastic, Ricardo. I think wise counsel, and I suppose key to it all is the time value of money, which makes a huge difference. We all think we've got a huge runway ahead of us, but we get there fairly quickly.
Exactly,
Right.
and it's having a plan.
That's having a plan. Fantastic. Thank you, Ricardo. So we've had some really wise counsel from BDO experts. And Bert, I'm now going to turn to you and ask you to sum it up in a way that maybe the best question is what difference does BDO make to a business owner? What is that difference?
Anthony, thanks. And it's a great question. And listening to all the speakers on this call, a couple of key words stand out, which I'd like to just leave with all the attendees. I mean, the aspect about the trusted advisors come up. And that aspect about a trusted advisor is one, and we know there's technology and the importance of technology. We know the importance of speeding up everything because there's greater regulation, greater governance, and a greater need to be accountable. So that's a given. That is impacting on our private owner managed clients. And how does BDO assist there? So from a business, being that trusted advisor, it's giving guidance, and it's still people dealing with people. And what we always find, we mustn't lose sight of it, that behind every business, there's a person. And that person wants to either give you a call, drop you a mail, and discuss something of concern. Ricardo touched on having a business advisor, a business coach. And that's the aspect that we talk to. So a very important aspect to us as BDO. And it does talk to our private segment that we have been involved in for many years. And I know Ian stressed on this in terms of the importance of how we have carried on nurturing the segment. And in actual fact, we very much still play a very leading role in the segment. And that also talks to our services, our expertise, our sector knowledge and industry knowledge, which we can only support our private clients so much better with all that knowledge. I think we mustn't lose sight of the importance of the segment. In South Africa, it's difficult to quantify how important the segment is because of stats and how formal and informal it is. If you look at the World Bank, it speaks about 90% of businesses are in the segment, private, sometimes referred to as SMEs. We're looking at both the smaller and much larger private-owned entities. So if 90% of the business is coming from this segment, just shows the importance of it, with a big contribution to employment, and which often is, depending on the country, it can be anywhere between 40 and 60% of employment coming from the segment, and obviously quite a significant contributor to the GDP level. Again, I stress, you've got to separate formal and informal, and in South Africa, I think our informal plays also quite a significant contribution to the economy. So as BDO, we're ready to assist, we're ready to perform that service as both a tailored solution to our clients and be ready to be their trusted advisor. Just on the one last point, if I could just add further to everyone listening to this webinar, is the importance of governance. When you need funding, when you need the ability to potentially sell, every single guest speaker here has spoken about exit, the journey of the business advisor, the business owner, and supported by the business advisor,
and the need to have that governance and support. Governance is actually going to dictate how successful you are at a future date. And there's quite a lot of research around this. In the US, they found that companies that have got good governance tend to be so much more resilient to both the ups and downs of cycles and the ability to reinvent themselves with good governance. And what I mean by good governance is to have people to talk to, sometimes having a non-executive board, sometimes having the succession as a conversation as to how you bring in new blood and so forth. So there's quite a lot of elements around governance, which is what BDO stands for. And ultimately, be assured. Well, that's what our clients get from us. They're assured that we're offering them a service offering that's tailored to their needs.
Thanks, Bert. Just I saw on your slide there was a bullet point called One Stop. Could you maybe just very briefly elaborate on that?
Yeah, thanks, Anthony. I mean, that's quite an important aspect of the multiple, and I mean, being a multidisciplinary services, and as you've heard, just being spoken about by the guest speakers, you know, from wealth management through to tax advice, the technology support that we can offer, and then just being a business coach and advisor. That's what we refer to as a collective of a one-stop ability to under the trusted advisor, provide that one-stop service offering, and also to add to multiple case studies that we of clients that we've already serviced over the years, and our success stories themselves. I mean, obviously there's certain clients that have not been able to be successful, but we always will try and give them the best advice in terms of the success factors. And the one key aspect is, how do we make clients better? How do we make them live their dreams? How do we allow them to have longevity in their business? And a lot has been said about exit and exit strategies. How do we manage that? So if you're looking at it from a family owner perspective or from a corporate wanting to sell in a later stage, or have additional shareholders, be transactions and so forth under the transformation agenda, those are all aspects where we can come up with some very good case studies of how we've helped clients in this journey. And I mean, the one in particular, Anthony, maybe just to put it out there, is the Ina Palman story that, it was an interview that was done last year, and I know BDO shared it, but maybe it wouldn't be a bad idea that maybe Ian and Ricardo, or one of them who was involved in that. I mean, I know Ian has been, call it the business advisor to Ina Palman and the succession of the Ina Palman family in taking this business forward. And I'll leave it there, Anthony, but maybe Ian can also elaborate a bit more on it. It's a great story.
Great. Ian, would you like to share the success story with us? Right, I'm not sure if we have a technical issue, but
I don't see him on the call.
no.
Am I unmuted now, Ant? Can you hear me?
Okay, sorry, Ian, go for it.
Go for it. Yeah. Look, just it's an interesting story. So Ina was a lecturer at Technicon, and when she wanted to set up, sorry, I can't switch. I don't know if you can see me. I think my camera might be off, but
that's fine.
And she started offering cooking lessons from her garage at her home where she lived. And her one of her sons then dropped out of accountancy and said and joined her. And I was introduced to her when they had a very small mini factory. And from then we've kind of grown the business together. And I think they had they needed guidance from time to time. And so, it's culminated in a close on R1 billion turnover business today, with a very, very strong brand. Get offers to buy the business lots of times. And it's been a fantastic kind of success story about how you can start small and with the right input and the right product grow a business. And I think, I've been very privileged to be part of that growth and the success story. She's still involved in the business today, and her son Graham is the managing director, and the other son, who's a lawyer, has also joined in the business as the business has grown. So it's a real family business with a really strong brand and strong product that's grown from strength to strength. And it's had challenges, but luckily we've been able to overcome the challenges and evolve the structure, and during the early stages as well, really encourage them to employ the right staff, where you've got a close family business and you're bringing other people in, and sometimes it doesn't always work and you've got to go back to the drawing board again. I think there were important lessons to learn along the way. Thanks, Anthony.
Fantastic. Well done, Ian, and it's lovely to see the success stories. Ricardo, I don't know if you want to maybe just mention how you played a role in terms of inner success.
Yeah, thanks, Anthony. Yeah, so I think that it's like following on what Ian said. It's all about just being that guide along the side, I suppose, along the journey of just structuring their affairs and taking a cue of what's needed to plan for that family's wealth creation. And I think, Anthony, one of the things which I think we can learn from that Ian Palmer's story, and I think it's one of the pitfalls we see in a lot of business owners, is not taking time to actually know what your business is worth, not knowing the value of a business. And what we've seen with that is it's not having that emotional value to say, I think this is what the business is worth, but it's actually having an independent valuation. You don't have to be a seller, or don't have to be looking to exit the business, but taking the time to get an independent valuation is often a very key strategy for success for business owners, because it starts setting the tone for how you plan for that wealth, setting the tone for how you plan for the business, how you create wealth, how you actually elevate that valuation. And I think that's often what we see gets people trip up as business owners, not taking time to actually value the business. And I think that's where, if I share from Ian Palmer, that's one thing they have done well, is continually just taking stock of what the business is worth.
Fantastic. And I imagine going through that exercise sort of on a regular basis does allow you to understand the triggers that add to the value and also focus on those points.
Yeah, spot on. So it's going to direct your energy and your focus out to where it should be there.
Wonderful, wonderful. And that goes back to the principle of working on your business and not in your business. Yeah, less blink will be fucking for it. Ricardo, maybe we can just stay with you.
Sure.
I see one of the questions here is very much around not having any succession plan and not having any estate planning. What are the potential costs and consequences for business owners?
So I think that's a real pain point that we mustn't underestimate, and a lot of people get it wrong. That concept of not having a succession plan, and succession is quite a wide definition, Anthony. And if you think about it, it's not only about your voluntary exit or your retirement; it's about sort of your involuntary exit, whether it's disability or death. And I think the consequence of it is, if you're not planning for it, you're going to just take what you get. We've recently dealt with the deceased estate of a business owner who actually died interstate. A very successful business owner. He had a construction company and he died without a will. And you would think, oh, it's not going to happen. But here he is, he died without a will. He's left his estate now to be unwound in terms of interstate succession law to his wife, his 3 children, and a stepchild. And it's created huge complexities, not only in terms of the distribution of the wealth, but also in terms of exiting the business. Leaving the executor, who happened to be his wife in terms of interstate law, who had to appoint an agent to now go and find a buyer for that business, negotiate with the other partners, get the maximum value. It really, actually, it creates a lot of anxiety and a lot of pain. And so I think the motto there is just plan for it. Make sure you've got a properly drafted will, not a vanilla will that you take off the shelf and you get from a bank. Make sure that it talks to you, to your family, to your wishes, and then update that. And I think that's where the concept of, we've all spoken about it, working on your business. It's a continual journey. This concept of planning, whether it's in your business or whether it's in your wealth or whether it's your family planning, you're not doing it once off. It's not like a destination. It's an ongoing journey. And having a guide walk that journey with you is going to help you, I think, spot the blind spots or identify blind spots look at the gaps and get you to do action. And I think that talks to your question around structuring your affairs and having that estate planner. Can I just add another comment, just as I'm thinking about it? It's often what we don't talk about with business owners is that retirement. And I think one of the pitfalls we've seen at BDO, and particularly is where business owners believe that their business is their retirement plan. And that's great if you've got a plan for it. And if you don't, you're taking a chance. And so I think, again, it's that whole concept of planning. It's actually putting into motion, what are you going to do with the business? If it is going to be a retirement, what does that mean? Who's the buyer? What's going to happen with the management? Who's going to take that over? And so there's a depth of, I suppose, plans and actions that need to be taken to make that a reality. Just feeding off your question there.
Lovely. And just one additional question, Ricardo, how important is it for the trusted advisor, or rather, let's call it the estate planner, in this case, to be conversing with the potential stake owners, the family, the heirs, and how long in advance do you plan for that? Because quite often one comes with instances where the business owner remains, there's no retirement plan, and everything falls out upon death of the business owner.
Yeah, I think that's the reality, is that very few people, and I think if I look at our client base, a very small minority actually do talk around their estate planning or their succession planning with their heirs. We advocate that it's a good thing to do, because in actual fact, you don't want to be called blindsided. But there's a lot of belief systems that need to be taken through in terms of actually having a conversation. I mean, taking a step back, what we sort of instill with a lot of our families is talk to your children about your wealth. Bring them into a review meeting so they understand and they start being educated around managing wealth. And so it's exactly that. Once you've got an estate plan, you have a succession plan for your business, whether it's death or whether it's a voluntary exit, you need to engage with those stakeholders, with those successors, because in that way, it makes it a reality. It brings them into the conversation and makes them an owner in that process. I think the myth we deal with is that if I talk about it, they're going to want me dead and want the business. But the reality is, I mean, you can't avoid that. But it's about coaching, and it's about being upfront with family. Yeah.
So I think you've covered it, Ricardo, but there is one comment here, is that the impact of feelings and interpersonal issues in family businesses do often do great things. And the question is, does BDO deal with this? I mean, I think you've covered it, but maybe you want to be a bit more specific around that.
So you can't differentiate or distinguish between sort of the emotional side to our relationships and money. I mean, money is so inextricably sort of linked to every aspect of our life. And so the approach that we do take with our clients and our families is to deal with the person. And we do a lot of sort of coaching, a lot of conversations with the family around wealth, around their relationships. But particularly around business owners, what we have found as a success and very effective strategy is to bring in a family, sort of a family counsel expert. And what that is, it's someone that's skilled in setting up a family counsel for a family business. Because we can deal with sort of the family relationships, the father, the son, the mother, the daughter, and we can deal with that in terms of planning. But once it gets to generations, and you've got 2 or 3 generations owning and participating in this family business, we found the great success in terms of having a family counsel and having an expert. We've got those relationships where we would then collaborate with these family generational experts who would guide the family in terms of creating a board for the family, creating a council, and having family meetings. And as the trusted advisors, whether it's a business or the wealth, we participate in those family meetings.
Fantastic. Well, thanks, Ricardo. My next question I want to put to Ian. Ian, there's a question that says, in a services company, how does one build tangible assets and wealth when you're running a services company?
Thanks, Anthony. I did reply in the chat because I thought we might be running out of time, but I think, a services company, we're in a services company as an accounting firm, lawyers, architects, engineers, advertising agencies, medical guys, a lot of them, and they've got characteristics of their own. I think you always need to be as profitable as you can be in a services company, because you've got to retain the talent of bright people that you pay a service to. But build some cash reserves in the business if you can, so because businesses can be cyclical. But again, have a pension and provident fund, a great way to get a tax deduction, up to 20% of your salary, or 360,000 Rand a year tax effectively. It's sheltered from creditors. So I think, if something ever happens with the business, that money's protected, it can't be attached. And then you've got, rules with how you can take it out or convert it back into a pension when you retire from the business. You can also look at the business property. You might be able to buy a property in a separate company or a family trust and rent it to the services company, and then pay off the bond and create a lot of wealth that way. And then even if you sold the business or retired from the business, you would still have a property that you could rent out. So there are, quite a few things that you can do, but it depends on the business, and obviously depends on how much surplus cash you've got available. Thanks, Ant.
Perfect. Thanks, Ian. I see we've got about 3 minutes left. I just want to sort of let everybody know, please, at the end, don't log off until you've answered our survey. So if you could wait for that. And then, because we do have 2 or 3 minutes left, I just want to maybe go to Amanda, a last question that was posed really around AI, artificial intelligence. We're seeing interactions and connections between softwares, such as Xero and SARS. It's a great way of making sure that data goes directly to source. What are your feelings about how we manage this? Do you think AI is going to replace us advisors, or do you think there's still a place for us to be managing this for businesses?
Good question, Anthony. And I was also running through the questions in the chat just to get a feel of, the questions coming through. And that one did grab my eye, of AI. AI, it's such an important aspect of technology, that machine learning. It learns your ways, it learns certain allocations that you've made, it learns certain patterns. It starts, I can't even get into how the machine learning evolves and develops. But the AI between SARS and Xero is quite powerful, in the sense that, online submissions can be made. But there are talks, and the comment there is right, that, there are higher integrations that are coming. There's so many, those IT14 SDs, for example, was a very consolidated view that SARS could do on a business's account. And having now those links to the accounting system is key. You have to have real-time, good, accurate information on your accounting system, because there are further integrations to come. I obviously can't speak of them. A lot of them are in beta phase. As part of me being on XPAC with Xero as well, we get to hear of these developments coming through. And it's quite scary, of the transparency that's going to be created between accounting and tax. And it's not that replaces your advisor. It's now your advisor can step in and start interpreting, giving that value add that a machine not necessarily could not be able to provide.
Thanks, Amanda. Sorry for cutting you short. I see our time is up. I think the message that comes out of this is work smarter, not harder. Work on your business, not in your business. So thank you, everybody, for attending. I hope you've learned a lot. Our contact details are in the chat. So thanks again, and hope to meet and chat to all of you. And thanks so much to the panelists. Bye-bye.
Thank you.
Thank you, Anthony. Thank you, everyone.
Thank you, everyone. Cheers.